Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite US Market Update. Taking a look at the charts of the S&P 500, you can see that we are still in that Wave 3 uptrend, but boy, the trend is getting narrower and narrower. We talked about this pennant pattern that's being formed, and I certainly think that should promote some caution as we start to prepare for a potential Wave 4 at any point in time. We've now bounced off this lower trend line back up to the upper trend line, and it just seems that there's only so much further we can go into the point of this pennant pattern. I don't like them as much as triangles. I'm still a triangle guy because that's Elliott wave, and it's an Elliott wave corrective pattern, so those are the ones I prefer. But you certainly have to pay attention to any of the type of patterns that are promoting a breakout. Now, remember that when you have these breakout patterns, you don't know for sure which direction things are going to go. This Elliott wave is not saying we're going to break to the downside. It's saying that if we break to the downside out of this consolidation pattern, this is likely where the wave 4 will end. We could still break to the upside and continue in the wave 3, but certainly something is about to happen in the not too distant future here in the U.S. markets. If we go to the SPY to bring volume in, you can see very interesting on Thursday and Friday we had above average volumes. Been a while since we've had 2 consecutive days of above average volume. Months if we go back towards the March-April time frame, as you can see. So something's going on, and institutions will, just like when they are starting to accumulate shares, we talked about this last week, they do the same thing when they're starting to unload shares. That could be what's going on, but we did have a big move to the upside on Thursday, but a move back down on Friday. We'll see how this plays out, but I'm pretty excited to see which direction the breakout is going to be, and just usually do the potential case studies to follow along at the end. But at this point in time, since it's really, I think one of the best positions that someone could put on right now would be one of our strangles. Over the years of studying Elliott wave, many of you are aware that I've created a proprietary type strangle method where you use the ideal delta and gamma when you create your strangle, not just one strike out of the money. You go down to the 25 to 30 delta on both the call and the put. And with this narrowing of the uptrend and the fact that we're very likely going to see some sort of a big move in the not too distant future, just really a strangle out to November on the SPY makes an awful lot of sense to me at this point in time. Looking at the VIX, boy, we're right down here at 12, and we've talked about this numerous times as well, the level of 12 acting as support, and if we break that, we probably go back down into that trading range between 8 and 12 that the market was in before, the VIX, I should say, was in before the market corrected in January. But boy, we're starting to get down towards the point of this descending triangle that's occurring on the VIX as well. So when you take a look at this pennant pattern closing in, you've got this descending triangle on the VIX. Something's going to happen. Don't know what's going to happen, what's going to be the trigger. May not be any specific type of thing that occurs as a trigger. There's all the stuff going on between China and U.S. with tariffs, but that hasn't really affected the markets. We have the Federal Reserve that is likely going to raise rates again before the end of the year. So we'll see how that plays out. And speaking of the Federal Reserve and interest rates, here we are with the TNX finally getting up to that 31 area that we had been talking about a few months ago, completing that big, large zigzag pattern, and it completed it with some sideways corrective patterns. These are the flats in the meantime. But we finally got up there. If you don't remember that, go back. We talked about that a few months ago. Look at the past recordings, and you can see the actual pattern that we talked about. It took a while, but we're finally getting up there. And now we're sitting with interest rates at the recent Wave 5 highs from back in May. Can we break through that? If we do, I think we will likely see a relabeling of this ABC, this latest ABC, and if not, we may start another one on the way back down, as we could be building a big trading range for interest rates. The dollar is quite interesting here. Moving to the downside, there's a lot of speculation that a stronger dollar is going to make it extremely difficult for the U.S. to pay their debts. So we're trying to weaken this dollar, and we're getting to the point where we're down at a pretty significant support level. And notice what happened with the Elliott wave pattern. Just right on cue, doing exactly what it's supposed to do. We finished the wave 5 to the upside. Where do you go? Everybody knows this. You go back to the wave 4. So when a wave 5 pattern ends, you go back to the previous 4. We've done that, and we bounced up a little bit on Friday. Now where do we go? That's going to be the next point of interest, is what happens now, because everything that was supposed to happen with this wave 5 pattern finished. And I think it's important to talk about the fact that you can use Elliott wave not just on shares. You can use Elliott wave on currencies. You can use Elliott wave on futures. It works for any type of security. Now, getting to the case studies, let's look at CLR first. This is the one that we were looking at as a strangle. And just as a quick reminder, we have the pattern where we had the lower highs and then the higher lows right there with that doji that occurred here on the 17th of August. We got the upside breakout, but looking at the DMI showed us that there was absolutely no strength behind that move. As you can see, it was weak. So then we got a big volatile move to the downside, and now what's happened? Now we've gone back up and we're testing the breakout. We are right at the point of the breakout. You can see that occurred during the week. So now, maybe from this point forward, CLR is going to make its decisive move one way or the other. So we're sitting down here at a little bit of a support area, down there around 59. So we had a pretty vertical move. A bit of a bounce back is not unexpected. And when we take a look at this vertical move here, you can see that we're right in that 50% corrective mode, which just happened to be right at the point of the triangle. So there's a lot of resistance right here where we are. If we break above this, maybe the original potential breakout move gets stronger and it runs to the upside, or we break down and finally get the significant move lower. But now we have actually a zigzag pattern in the breakout, which does happen from time to time, not always, but it does happen. It's kind of interesting when it does, as you just watch the breakout play out. The two most recent case studies that we looked at, or the three most recent ones I should say, MMS still moving to the upside. We did come down enough during the week to get a wave 4 labeling, but we bounced right back up, as you can see, on Friday. And again, a lot of this will depend on the market, if we have a strong or weak tape in the market. But right now it looks like we have now a target price to go up to the wave 5. We'll see how that plays out with F5 networks. We're continuing to move up in this wave 5. We're getting into this window here, and we had talked about hitting the midpoint would be a target. This was more of a shorter term type of a position. If we don't get a relabeling to an extended wave 3, which is possible because the wave 4 correction was at the first fib level. And quite often when you go down to just a 23.6% fib level, you're still in an impulse wave. So we'll see if that 5 relabels to a 3, or if we just get to this upward target and that's the end of it. But it's still continuing up exactly as it's supposed to do. And the most amazing one is MasterCard that we talked about, powering higher in this wave 3. As you can see, just straight up throughout the week, worked out extremely well. We've got a very strong ADX within the DMI showing that this is a good strong wave 3. Doesn't look like this one is ready to come to an end at any time soon. We'll just have to wait and see how that plays out. But that catches you up to date for this week. Hope you've had a wonderful week, and we'll be back to talk to you again next week. Keep an eye on that S&P. It's going to be interesting. Take care, everybody.